generally speaking, it's just worrying. Like the US economy is essentially worrying, and it's kind of the pin-up thing for economic health. And but then the correlation with oil, how does that link then?
As in, so for what it's basically, what does this mean for oil demand? And obviously, the weaker the dollar, that's gonna help foreign importers because their currency is appreciating relative to the dollar, and that's going to be constructive.
So in a way, the rest of the world who consumes oil wants the dollar to be weak, and the prices to be weak because they get double whammy. So they want a bad US economy, but oversupplied oil, and that's kind of what they're getting.
And it kind of adds to that bullish narrative.
Well, from this price, again, it's always what we're talking about is bullish and bearishness from a price. And we've obviously, with the price sensitivity from China clearly, and consumers at the beginning of the year as well, clearly in the 60s, there's a lot of demand. And that's essentially what we're saying. So bullishness from here. But anyway, this like in-depth macro analysis is done on Macro Mondays every week. And I think you must have talked about this yesterday quite a bit, right?
Yeah, so we did a section on Eurodollar. Eurodollar's 50% of the DXY. So that's contributing a lot.
Well, I recommend people go and check that out, because clearly there is a macro shift in sentiment, right? Ultimately, even saying that people are excited about the German like bond market, that kind of thing. I do notice like a very, generic shift in mentality that Europe and Britain have been smashed for so long. And it's not like that's changing, but their currencies are improving. As you say, the safe haven investments seems to kind of be heading that way, more private equity investments, things like that. So maybe we've reached that kind of rock bottom time. I don't know.